So, hope you're doing well, team. Um, in terms of what's been going on today, it's been relatively sleepy. We've got retail sales coming out in about 15 seconds from the US. So far today, we've had the GDP growth rate for the United Kingdom, of which we've seen a pretty big growth rate GDP print. Actually, it's 0.9% from 0.3. Quite bullish the pound. Tomorrow, the highlight of tomorrow's day that I'm going to be missing out on is building permits. So I really don't think it's going to be too explosive. Retail sales for the United of the States is 1%, and that's from a previous figure of 0%. So it's actually a really big uptick in those retail sales data. That's monthly data, not annual, FYI. So don't imagine it's going to cause too much of a stir, although the US 30 Dow Jones might be having a bit of a rock and roll from it. NAS 100's having a little bit of a spike here. And the Dow Jones, there we go. Dow Jones is always going to be affected by something like retail sales a little bit more than something like the tech stocks. I imagine the S&P's having a good time. Yeah, so it's having an alright time as well. US Dow Jones definitely leading the charge though from the volatility from the retail sales, which hopefully might push us into an area that we can consider selling into this afternoon, or alternatively buying into, depending on where it ends up. Hey, good evening, Braden. Good to see you, bud. So the rest of the markets then, before I start going down the rabbit hole of this afternoon's stocks, the markets today have been a little bit of a DOS. Been through the assets several times, keep my eyes peeled for any potential positions. Probably am in a current state of little cautious sort of mindset. I would say yesterday was a blow, to be honest. Looking at, if we count the gold short, that was a 0.25er. Even though that's hit stop loss today, it will go on yesterday's open positions when the position opened, and so therefore yesterday was a break-even day. We would have had, with the inclusion of gold, 10 positions, 9 of which, seven. So no, 6. So we had 10 trades, 7 of which were losers, and 3 of which were winners, and it was a break-even day. We were plus 0.25%, and now we are not. now we're break even. But I think, like I said in the daily performance review yesterday, there are a lot of lessons there that can be carried forwards, and it's also good to take note again and continuously take note of this. The fact that we did lose 7 trades and we only won 3 and we didn't lose any money. That's the other thing, of course, right? The portfolio is not down. It was protected. And it's really good for your minds to know that and to see it happen in real time as well, because you can really get caught up with one loss after another loss after another loss, and you get those down days. But at the end of the day, all it takes a couple of winners and you're back to break even again. And because of the risk reward ratio and the whole setup that we use, it's not going to take long to start earning money again, Hey, good afternoon, James. Yeah, no worries, mate. No problem at all. So, yes, not very good. Bit of a dicey market yesterday. Today doesn't seem any different whatsoever. The FX space, if we go through, we can essentially ignore this afternoon's FX US Open alongside the retail sales, which are causing the most recent spikes. But generally speaking, today we've seen not much of anything across these assets. Again, this is retail sales, so if you ignore that, it's just been a real grind. Aussie NZD has been a grind. Excuse me, Aussie against the dollar. CAD Swiss has had a tiny little bit of an uptick ever so slowly throughout the day. Euro Yen, this is this one. That's well, funny enough, actually, that one's now in grey. I don't really want to be in that one now, but there we are. Euro NZD, nothing. Euro Oz is seeing not really much of anything. Euro USD, pound against the yen. Cable's actually been okay. Actually, this is one that caught my attention earlier. To be fair, because yesterday we won a short, and then we went back up to the previous high. Then we went back down to the previous low. We formed a bit of a 4-hour order block here. Lovely BCR at the end of it, break of structure. Another really nice entry criteria to previous highs. So this one has actually been providing ongoing positions, which has not been too bad. Unfortunately, the end of the day, we only called one short, and that was it for that one. But it has actually quadrupled the amount of profit that we could have done. A little bit of a shame, I suppose, that we weren't seeing any more calls from that. There we are. That's that one. NZD JPY has not been worth looking at whatsoever. Same as the NZD USD as well. That one's been in a shit show recently. USD CAD, still waiting for this one. Took another hit on that one yesterday, and that one's just continued trading the range. The range has the capacity to be traded, by the way, if you really want to. It's just not really been feeling it myself. And then we've got the USD yen, which has been cruising along sideways as well. So very, very flip-floppy market. Incredibly difficult state structures to be trading in at the moment. And any real lack of trending assets, and even the range-bound stuff that we love to trade as well, generally speaking. I mean, the euro yen this week's range has been quite nice, or like part of last week and then into the latter half, first half of this week. It's been really nice. Very clean looking trend. But then from that sort of Wednesday morning, all of Wednesday day, and then Thursday all day as well today so far, this is what we've been dealing with. So this kind of just really nasty flip-floppy price action, which half the time doesn't even meet the range lows. I mean, it's just nothing. It's nothing there for us, is it? It's not good. So I think we have to take into consideration the fact that we have seen some excessively good weeks. I mean, I'm never ever aiming for things like 15% return in a month. You know, that's not how I trade. That's not what I target. You know, in terms of my targets are quite loose anyway, because I just simply focus on the process day in and day out. But you know, to be hitting over 15% last month, I mean, this month we're probably on track to have another 15% plus month. You know, so yeah, it's let's have a quick look. I don't know what we're on at the moment. This month so far we are minus 0.25 on top. It's not been pulled through yet, so 987,368. So 15.68% is where we are at the moment, and we have still got the other half of the month to go. I mean, we're on the, you know, it'll be what, the 19th, I guess. So yeah, the 19th of August is Monday. All of next week, all of the following week, the 1st of September is on the Sunday. So yeah, I mean, yeah, I'm gonna be back in the office in the full swing of things from the 27th. So that's not next week. That's 27th, the week after, Tuesday of the week after. I'll be back in the office full swing. So yeah, we've still got a lot of time left, and to be looking at a 15.68% return already, you have to take the bad times with the good, don't you? You know, you have to be fair. You have to be fair to the markets. You have to be fair to yourself. It's not sustainable to continue on in that kind of level of decent trading conditions, you know, for lack of a better term, I suppose. So yeah, I think I do feel, you know, yesterday at the end of it, after taking beating after beating in these trades, I was kind of sat back in the evening last night and I didn't even feel anything, you know, I didn't feel really anything from it. It was just kind of to be expected. I was almost waiting for it to happen, I suppose. But today's session, anyway, guys, I mean, it's going to be pretty short-lived. You know, that is the short of it. I'm not going to be dishing out too much in the FX space at the moment. I'm certainly not going to be looking at any of these in a serious format, because this is at the end of the day fundamentally driven, which means the likelihood is it's going to be catalytic and it's going to come back down and it's going to catch everyone with their trousers down. So the long short of it is, we'll dish out some setups. This takes the piss, doesn't it? Gold's come right up, knocked out liquidity again, then retail sales is shoving the damn thing back down again. I mean, it's spent the entire day going against us, knocks us out here at 1:15, and bang, 1:30, max comes on, and straight back down to break even if the trade was still open. Am I going to take a second attempt in this one? I don't know. What do you guys think? There's no right or wrong answer here, but what do you think? I mean, the last few weeks we've seen a lot of second attempt trading go well for us. First attempt gets a knockout, second attempt's, a good strike. So, it has been. You can't deny it. It's been really good for us the last few weeks. So what do we think? Putting another 0.25 down on this one for the possibility. Do we think this is just a fundamental move? The market's going to come back up? I mean, ultimately, it probably would have been prudent to consider going short from right up at the bloody high there. How could you have foretold that? I mean, this is hindsight trading now, But it probably would have been prudent to do something like that. Okay, wait for a BCR. What would you wait for a BCR of, man? What area do you think? $24.55. Okay, so you're thinking of BCR of the level that we waited for last time. Because I had a potentially different view. Because if I'm looking at this at the moment, right? Now we've got a pretty big inflection point in price action, which has formed quite recently. Right, so 24.55, yeah, great level. I mean, that's the one that we were looking at a breaker structure for entry on last time. We could wait for a BCR at this level, but the fact of the matter is we had a good BCR yesterday. Yesterday the trade was triggered at 2:15. We got the BCR of it, breaker structure was at 3:30. And so that was a perfect setup. But I'm thinking we've come down to this level right now. If we look left, if we draw a zone around this area and then we look left of that area, well, then it starts to build a picture here. We got more liquidity, right? If we drag that one right the way back, look at this. And then underneath here, we have some really, really nice, beautiful moves. So what I'm thinking is possibly change the whole thing of this trade and actually bring that right the way down here. And then the stop loss all the way down to here. And make that the trade idea. Now we'd be losing a little bit on the risk reward for sure. We're starting off at a 1 to 4 or 1 to 4.2 or something, which is ridiculous anyway. I mean, it was uncomfortable having a trade with that size risk reward ratio, frankly, but that is what it yielded. So I'm not going to complain. But this time, we're looking at around a 1 to 3.4, maybe 50% point is there. So yeah, 1 to 3.4. And at this stage, we've cleared out risk number 1. We've cleared out risk number 2. Now the next risk factor we have is about here from a technical perspective. So that's your next technical risk factor. I mean, to be fair, it's bit difficult here because this is definitely the one in that area, but then actually it's about there on this one, so it's a little bit difficult, but let's just put it bang in the middle of those two areas, right? So that's the area. So then we've kind of got the same margin again, but we've cleared through the first major one. We're already looking at a 1 to 1.2 ish at that stage, and then we just ride the rest of the thing down. Now, if I go up to the 4-hour and daily time frame for a moment and just look at this, do we think that trade idea is too near the median of the range? Again, there's no right or wrong answers to this. I just want to gauge, your way of thinking. What do you think about that? If we clear out the liquidity in this area first. Yeah, that looks good. That looks good to you. James, are you at work at the moment, or can you actually comment on this? Because this would be a good one for you as well, mate. Just because of where we were with our private call on whenever it was when was it? Monday evening. You think there is room there as well? Okay, good. Because the thing is here, guys, right? If I'm just gonna let Matthew finish this question. Just that high to the left is a hazard. Well, like this one here, this high. I think the midpoints look easy to break. Last two waves can go direct. Yeah. Yeah, I like that, Matthew. Yeah, definitely. Yeah, so I think this is good. And your guys' way of thinking here is good. Yeah, it's really good. It's exactly what I'm looking for. So we've got these major inflection points. Now, at the end of the day, we haven't really seen price action come back to this area from this point before, but we have seen some pretty big price action pullbacks as a result of it. If we go right back in time here, look at this one. So price actually came to 24.40 and then came all the way back down to a low at 24.17. That's a big differential. If we crushed it here, fine. We got pretty damn close to it there. Now, frankly, I could probably make that zone just a touch wider, right? So we've come up to it there. The reason I would make that zone wider isn't because of this point on its own, but because of the lows of the moves here. We've got this double bottom in price action here, which is too good to pass up. So that's why I would have that bottom of the zone there. We have rested between this area for a while here. We get the breakout, and then we trade between these two trading margins from the 31st at 11 p.m. And then we only break free into the major inflection point area, the cash-rich area at the top, on the 2nd of August. So that's 31st, 1st, and then 2nd we break above. And that's the first Friday of the month right there, guys. And then this is a gold chart, so what do you think was the thing that broke it through there in the first place? And goes to adding a bit of confluence into the fact that the levels that we're trading on are actually more powerful than we may have previously considered. More fundamental catalyst event happens on the first Friday of the month. NFP, exactly. Yeah, exactly. First Friday of the month we got NFP. That snapped the level in half. The one that's actually caused price action to come back up to this area in the first place. Yes, we did get this nip through here. Admittedly, that's not great for us. But I think if we can clear out this one, which we kind of are at the moment, and we clear through this one, we can then look at a potentially nice, better path of least resistance than we previously had in this area here. Now, yes, of course, we are dealing with that one, but it's never going to be completely straightforward. So that's what I'd be thinking. That's what I'd be thinking. So I'm going to put that as a pending order. I'm going to risk another 0.25. I'm going to put another full risk down on this one. Okay, and this is a pending order. Okay, we're currently at this aggressive entry. It's a 1 to 3.4. Frankly, team, I'm more happy going for a 1 to 3. 0.75% return on this one over the course of a few days. I'm absolutely fine with. Nice complementary trade to the rest of the work that we're doing. So 1 to 3 on that one. Stops nice margin above this liquidity zone here. We've cleared out liquidity number 1. We've cleared out liquidity number 2. We have a straight shot down to 24.16. We break through this one after a bit of a bounce, and then we can get on our way back down to these areas down here. And that's what I'd be thinking for gold. Okay. What time is it? 10 to 2. Let's get a move on. So, I'm going to clear down some of these charts here. Start with a fresh pair of eyes. Liquidity right at the price line at the moment. So, we've got this area, right, that we're working with in the Aussie CAD. Now, from where I'm standing, this is an M reversal. If we get a 15-minute break close retest of this area, it's going to be a retest of the midpoint of the M reversal, which means we could be looking at a potentially nice sell-off. Now, the level of liquidity before we get, after we break through this area here is going to be, I love the low of that move, which marries this move, and all of these highs all the way through. So what I'd be thinking is probably going to aim for something like that on the 15-minute time frame. Now we've got apart from the top of this M reversal, we've got pretty clear trading margin throughout this area. Now these areas are all marrying this one, this big point of liquidity here. And so there's a lot of trading activity between here. And so therefore, that's kind of what I'll be looking at. So what we're looking at here, 15-minute break, close, and retest. Target profit down in 90.26. And stop loss, that's a bit wide. Nice margin above, 1 to 2.32. Now, dependent on where this retest goes, of course, because that is acting as the liquidity level. This is the midpoint of the M reversal. Price action comes back to this area. We get the breaker structure. You could be triggering the trade in this area a little bit or not. So the risk reward ratio might be better than I'm telling you it is right now. It could potentially change. Now this cannot be a pending order. So now with the inclusion of Julian in our trading lounge, I now have individuals all around the world. Got United Kingdom, Australia, and South America to contend with. so frankly, it's gonna be a right old show. So I don't know about your different times and if you can make that happen, but I will leave the trade with you, and you can make your best efforts to make it work. So, Julian, I know you haven't been around here to see the whole process be carried out, buddy. So, a break, close, and a retest automatically assumes a manual market order. Alternatively, if the breakout happens, the price comes back to retest, then you can put the pending order in as soon as the retest is completed. So it's at the point the price comes back up and retest this point of liquidity that you can then put the pending order in. Obviously, if this gets too late for you and you need to go to bed, then that's just the way it is. And you are not to put a pending order in before this happens. That is the process, and it's the process for a point. Okay, and there is a point to the process. There's a point to everything I do. Believe it or not. It may seem like madness, but it's not, rest assured. So, the retest takes place. We then get the continuer. You can get your pending order in then, but that's the trade idea on that one. Again, could be a 1 to 2.34 at a bit of a lax entry. If you get an aggressive entry, could be a 1 to 3, possibly, but really our sweet spot is around that 1 to 2 to 1 to 3 area. We don't always need to be going for the 1 to 3 risk reward ratios. That's not the way the risk strategy was built upon. Okay, let's move on. Aussie yen, that's just ridiculous, so I'm not touching that with a... Actually, wait, should I hold my tongue? Is that there is a beautiful little area, isn't it? Yeah. Oh, actually, I should have held my tongue indeed. That's very nice. That's lower down than that one. So this is the one that we'll be using for our breaker structure. Now we don't have any kind of retest upon this AJ at all. None. So let's just get that a little bit higher. I mean, that is looking very nice. So then let's match out a breaker structure point. Easy stuff. That's right the way through there. Now guys, you know when I pick these areas out of price action and I do it at the drop of a hat, okay, I do have to remember that, you know, maybe not everyone's going to be looking at the same thing I am, of course. Do you know why that is the breaker structure point for the entry? Is everyone across that? And don't just say yes, for God's sake. If you don't understand, then just say I don't understand. Structural point of the markets. Yes, yeah. All right, good stuff. Okay, and you're absolutely right, James. Yeah, because it is the structural point in which if we see the breakout, then we are likely to see the collapse of the price of the asset. Also, if we don't actually include all of the liquidity flow terminology that I am accustomed to speaking with you, just look at what the actual bars do. I mean, that it really is that. Price comes up to the major inflection point, right? So this is the cash rich area up here. Cash. When the market gets up to the cash, we come back down and we stumble. We take a pause, don't we? We rebound here, we take a little bit of a pause. When the asset drops through this area, bang. Then we come back up to retest, bang. Yeah, and then we come back up. We come to cash again. We got the cash up here. And we stumble. We take a pause. It's almost like, you know, you imagine those Olympic divers and they're walking out on the boards and they're looking down at the huge pool of water down here, wherever they are. And bang, they jump off and down it goes. That's the kind of thing that we're looking at all the time. So then if I just grab that tiny little level, and it does not need to be big, and I pull that right the way across, honestly, it never fails to amaze me. It genuinely doesn't, even after so long of doing this, being able to pull out these really cool little levels in the market. Because if we go down to a 1 minute chart now, and we look at that level, look at what's going on that level right now. Rebound, retest, continuation. We've hit the cash, and now the market's going down. And now I bet you guys, I bet every single one of you, we're going to take a pause, and we're going to trade around these margins for a while. When I say a while, I have no idea what a while is. A while is until the point where the market breaks below. But I bet that's what's going to happen. Now, what my plan of attack is here, and you guys already know where it's going. Entry, break a structure, target profit down at the lows there, and ultimately a 50% target profit between the two zones above, leading to a 1 to 2.3 to 1 risk reward ratio. That's the trade in the Aussie yen. Now, it does seem a bit crazy that we will come down to that area, but at the end of the day, we have not had a retest of any of these areas yet. None of them. None of these, none of those. And so therefore, I do expect there to be some kind of retracement. And look at that. We're bouncing from the level. All right, so that's going to be the Aussie yen one, okay? And this is a pending order, team. Pending order, 0.25%. Let's see how we do. Right, what time is it? 2 o'clock. I need to hustle. So that's that. Euro NZD. Let's go back up to the 15 here. Well, I don't really. Nah, I'm not gonna do it. I'm not gonna fool around with any of those commodity currencies at the moment. Got the yen in. I've got the Aussie in. Pound yen. Wow, yeah. I mean that looks pretty crazy, doesn't it? But the difference with the pound yen. What's the difference with the pound yen? Why do you think, if I was in if I was an institutional trader, why do you think the Aussie yen would be my go-to over the pound yen if I had a choice between the two? Looking at this bit of price action, what makes the Aussie yen the pair to choose? And this is regardless of the outcome. The Aussie yen might be a loser and the pound yen might be a winner. But in the essence of probability, why would we be choosing that AJ? Or would we be choosing the AJ? Do you guys actually prefer the pound yen? Okay. My God. What's the time? 2 o'clock. August the 15th, 2024. And Braden said he's unsure about something. Jesus. Something must be wrong. No pressure, mate. No pressure. I tell you what, just because of that. Oh boy. Alright, well, I'll tell you why. Well, James has already told you why. The GJ is choppy, but I'm not entirely sure you're speaking about the right thing here. The reason, let's look at the AJ again, okay? Right, look at that AJ setup, okay? Look at the price action that I just showed you. Look at these areas in here, right? We've got two major inflection points in this chart. We've got the inflection point above, the ceiling, and we've got the inflection point below, the floor. Okay? So, whilst in this space, we've got a really, really beautiful move down, really beautiful move up, down, down, okay? Really, really nice moves. Accentuated moves. Okay, I'm really enjoying that on the AJ. Yeah, exactly, Scotty. Exactly, mate. Well articulated answer, mate. Yeah, good man. So exactly that, guys. The void between the margins on the GJ and the AJ different. There's a big difference. Look at the margin on this GJ. This is the GJ margin that we're expecting to trade. Look at the difference in the price action here in comparison to what we were looking at on the AJ. This GJ, not only is it a bit, sort of all over the place and stuff, but it doesn't actually ever reach back up. It's very, very staggered, isn't it? Itsy bitsy flip floppy market. Whereas if we look on the AJ here, this is the exact same margin again. Let's just unstretch my charts here for a moment. Look at these runs. Look how consistent they are. Really nice price action. Now, just to dig into this even further, what does this mean? Now moving away from technical analysis, what does it actually mean when we see the difference in the price action between the pound against the yen at that exact same margin? Really annoying having the chart scrunch up all the time. What does it mean if we look at price action like this in comparison to price action like this? Yeah, clearer path of least resistance, but even further. Go even further. What does it actually mean? More money. Yes, exactly. There is more wedge in here and in here, which means the likelihood, the outcome, and the probability for us to see these accentuated moves and the retracement back from this area down to here is increased. There is more of a chance of that happening in the AJ than there is the pound yen, because there is more money in our liquidity zone up here than there is down there. Yeah, bang on. Let's have a look at that 1 minute time frame again. Yeah, look at this, guys. See what's happening here? Look at this. Where have we seen this before? We've seen it before back in the past, haven't we? We'll just get ready for it. Yeah, no worries, Paul. Have a good one, buddy. Catch you then. Right, so that's it, guys. Yeah, so ultimately looking at AC, looking at the Aussie yen, looking at gold down here. I mean, that takes the piss, doesn't it, to be fair? But anyway, we are looking at gold. Yeah, that's where we are. That's where we are with that. So, it's 2:05. Let's get cracking on with those US stocks, get ourselves prepped up for the afternoon. Hopefully get a couple of wins in the bag. God knows I want them. So we've got 25 minutes until the market opens up this afternoon. And the NAS 100 currently exhausted from its leg up. Obviously this is a fundamentally driven move. Now the retail sales data is significant, don't get me wrong, it's a big jump up from where we previously were, but it is only a monthly figure, not annual. Now if we look up on the higher time frames here, get a picture of where we are. Interesting, so on the 4-hour time frame, and the only reason I'm going back this far, guys, is because of the distance, otherwise I would never look at a 4-hour chart for this, okay? So it's the only reason we're looking at the 4-hour time frame, because of the distance back we have to travel to find liquidity. And so I'm looking at this 4-hour time frame at the moment, I would argue that we're actually trading up at a really major area of liquidity here. Okay, big one. Now what's the likelihood, after we've had such a run up in this NAS 100 at the moment, that we're not due a little bit of a price action pullback? I'm not talking about anything significant here, but maybe an area like this, for example. Now this area may not be the cleanest or the tightest area that we're looking at. It's got a lot of lows, a lot of wicks coming through the bottom of this liquidity zone, but there has been a lot of action between it. Lots of action. Now there's no way on a 1 minute chart we're going to be using this as the trading margin for our trade. No way a hell. But this area in here, for example, could be. So let's go back down to our 1 minute time frame. Let's have a look at this. Okay, so now we start to see a little bit more sense made out of it. Frankly, I would be using this area in particular for the trade, not that one. And then what we're doing is we're looking for the breaker structure for entry. Now, again, we've got 23 minutes to go until the market opens up, so we really, really want to be hoping that we're not going to break structure beforehand. However, this point in here looks like a pretty valid place to consider shorting, or maybe actually on the contrary down below it. So my trade idea this afternoon, very, very small trade idea, is going to be between 1920 and 1914. We're going to be looking at in and out trade. Again, this is a US stock trade, so if you don't want to use pending orders, then I tend not to for the US, so I tend to go manual order. But you could do. That's really down to you. If you've got to go, if you've got to get away from the screens for whatever reason, then that's a capacity you have. Now, that's a potential trade idea. Another potential trade idea, of course, if we are still trading above it at the time of the market opening, is there. And that's a really, really healthy trade. Because if you get the breaker structure below that area and you have a decent target profit above, then you're going to have the same TP down there, which means instead of a 1 to 2.8, you're looking at a 1 to 4.2. And that's significant. You know, we don't really want to be aiming for things like that on a consistent basis. It might be the score that actually we prefer to go for the option number 2, which is actually creating a 1 to 2.4, but having 2 levels of liquidity inside. So then this comes down to technical risk management, and however you want to do that. For me, I'm not entirely sure. 1 to 4.2 or whatever it was, it just seems a bit excessive. But we could well do it. You know, it could well be the thing. Unfortunately, it does look like this might break structure before the market opens up, in which case we do not want to be anywhere near it. And option 2 will be the only option we end up taking. Okay. Now, for those of you who've been around for a while, don't mind me talking about the more simple instructions here. But as we get new members, I'm going to have to, articulate things in a slightly more, simplified way. So yeah, that's that. It does look like we're going to get the breaker structure here, unfortunately, which means option 1 will be off the cards and option 2 will be the one to go forwards with. Yeah, you're all good, man. You're all good. So yes. Yeah, so that's the NAS 100. Now, if we do want to go long today, you guys have really got your work cut out for you. I'm not going to beat it around the bush. Very simple. You have definitely got your work cut out for you. Now, the long TP is nice. It makes perfect sense. Really decent trading margin. But it is going to be a full 15-minute BCR. Okay, full on 15-minute BCR. Continuation. The continuation on the 15-minute BCR can be on the 1-minute chart for that utmost aggressive entry, the really fine-tuned stuff. So you look at it on here, you get the breakout, you get the retest, flip down to a 1-minute time frame, get that retest continuation. So as soon as the continuation happens, you can be in the market. Now, I want to explain another train of thought here. If over the course of the next 19 minutes, if over the course of the next 19 minutes the NAS 100 collapses, and we then trade down to one of these areas, like this for example, then the whole parameters are going to change and we will be on the buy side of the market. So we don't really want to find ourselves shorting the market in between this area. Frankly, it's too high risk. We've got this in here, for example. We've got, to be honest, even the low of that area. And then obviously we've got the liquidity down here. There's too much to bust through in a comfortable way at that stage. So we want to be leaving the market out down here. When the market comes down to this area at 19,050, we can then get the buyback. So then we're absolutely fine buying into the price action when we get down to here. That was a crap line, wasn't it? Jesus, what's going on? Yeah, that'll do. So then we're absolutely fine. Market comes down to this area, and then we can buy back. We can buy back to here first of all, and that's going to be pretty decent. I mean, that's going to be a 1 to 2 risk, and you can then manage the trade and move the target profit up to these higher stages as the market goes on. Now, hopefully that's not the play, because frankly it would take ages to complete, and you'd probably be trading at sort of 5 o'clock this evening, and I know some of you that's going to be difficult. So let's hope that the market stays around here and then breaks out short, and then we can capture some of these shorts on the way down for the corrective. But that is my bias anyway. Now, US 30 Dow Jones. Again, US 30 Dow Jones looking very extended up at these highs at the moment. Very, very big leg up. The retail sales has done this one certainly some favors. 50-minute time frame, looking at this area of liquidity, we're kind of right in the middle of 2 major inflection points, which means we have the median of these areas, and the median right in the middle certainly is a median at that. Nice inflection, okay, lovely retest, lots of money in this area at the moment. We drag this one along. It's exactly where price is reached. So for me, this is in retest territory as well, just the same as the NAS 100. Now looking down at a realistic expectancy for this one to pull back to, probably going to put us in about, I would say there, it's not super clear cut, but I'm looking at this area in here, right? That's what I'm really looking at. And this area in here as well, where we've come up and come straight back down again. Then we've broken up, we get the break close retest. Definitely used areas of price action. So we drag that one right the way along here, and this becomes our trading margin. So down the 1 minute time frame. And then we're looking at that breaker structure level. Breaker structure here is, again, not actually that clean cut. If in doubt, if you like levels are too thin, you're like, oh, you know, that's really not looking great, just increase the width of the zone. Increase the width of the zone. Make sure you get all of the candlesticks in there together. So therefore you're reducing that margin for error. So then you look for the trade idea after it's broken through all of this noise, and you've then just got this really nice path of least resistance. So break a structure at around 40, 30, 62. You come down here, target profit at the top, ceiling of this zone below at 40.23. Stop loss, sort of, I'd say maybe a little bit above the 50% point in these two zones, just in this case because it's a very, very tight little trading margin. That's going to yield a 1 to 2.6. Okay, so that's going to be that one. If you're looking long today in the US 30 Dow Jones, which it does have the room for, bearing in mind the NAS is only 0.97% up, the US 30 Dow is only 0.9% up, so these do have room to travel a lot further if they want. It's going to be a full 15-minute breakout retest. And to be honest with you, it could even be a 15-minute continuation of this bad boy. I mean, it's a big one. So again, zoom in, check out the margin here, a little bit more of an eyeball. I'd probably say, I mean, it's definitely a 15-minute BCR. You can do the 1-minute continuation if you so wish. It will be aggressive. It will automatically carry a higher level of risk. But it is your choice. For me, you know, I pretty much know what I would do. It's going to be a 15-minute break close retest, and then it's going to be followed up with probably a 1-minute semi-aggressive entry. So let's say, for example, just to make this absolutely clear, if we say get the 15-minute breakout, we get the 15-minute retest, and then this area here, we're probably going to have maybe 2 or 3 1-minute candle breaker structures before we get on our way. So that's where I would put my entry. If we break structure, let's say here, we break structure again here, break structure there, we're in the trade, right? So then our entry is going to be about here. It's not a conservative 15-minute entry, and it's not an aggressive 1-minute entry. It's somewhere in the middle of those two. I really don't want to overcomplicate the process here, guys. You know, generally speaking, there's either an aggressive entry or conservative entry, and that is the way it is. I'm not changing my tune there, but I'm just saying in this one, I'd probably be executing somewhere in the middle. In hindsight, I guess you would say if we take the trade and it's profitable, and I'm talking about the trade afterwards, it's one of those situations where I would say to you guys, yeah, my entry wasn't that good. It was a little bit lazy, but I'm still happy with the trade. That's exactly what I'm talking about. Getting a lazy entry on purpose, and I hope that makes sense. I might have convoluted that. I'm not sure. I hope that makes sense. So that's the plan for the US 30 Dow Jones. Okay, so I'm going to wrap things up there. Does anyone have any questions? I'm still insulted that you included me in the UK and all the blood spilled trying to get rid of you. Sorry, Michael. Ireland as well. Yeah, but you guys don't have too much of a ridiculous time zone, right? You know, you're still in a good time zone. Good for me. So that's the only reason I said that. I don't know if yours is the worst, Bathori. I'll start calling you that so everyone knows who I'm talking about. Yeah, I don't think yours is the worst. I would say, I mean, to be honest, Braden and Matthew do very well to be up and around for the sessions. So, but Australia has got the biggest difference, isn't it? I'm awake since 2 a.m. Yeah, I mean that's pretty crazy. Yeah, that's pretty mental. What's the time there right now? What's the time there when when the stream starts? Okay, all right. So that's not too bad. That's not too bad. All right, guys. Well, I'm gonna love you and leave you there. So good luck this afternoon. Let me know how you all get on. You know, I think. At this stage, we've got some trade ideas, a couple have triggered. So we'll have to wait and see how those go. Obviously, we've got the stock plays to get our teeth stuck into this afternoon. I think it could probably be all right. So let's just keep on ticking along and see how it goes, and let me know how you guys get on in the Traders Lounge. It's been a real pleasure. I know it's been a bit choppy this week. I do appreciate we did incur some damage yesterday, but I've got no doubt we'll just push on and it'll be absolutely fine. It always is. So have a good one. And of course, guys, as you well know, obviously I'm traveling tomorrow. I won't be around. I will be chatting in the room, but I won't physically be on in the streams and stuff, and it will be intermittent at best. So I hope you guys have a really good day tomorrow and a lovely weekend. And I look forward to catching up with you all on Monday, where I'll be coming to you live, or kind of live, from an entirely different country, which should be great. So have a good one, guys. Take care of yourselves out there. Trade safe, and I'll see you then. Bye-bye.